Ain't nothing like an end of the year bonus. We're going to talk about how that applies to your save and spend system coming up now. We're back. It's the Banking Bros with another great episode here. We're going to talk dividends today. We're going to get right into it. I'll be your host, or at least half of the team, Jay Do.
And I'm Jonah Do.
We're going to be talking about how a mutual insurance company benefits and profits those who are involved, who have participating policies, and we're going to announce something really big for you in just a second for all of our clients, the folks who have become members inside of the Cash Compound community. We've got something special for you as we launch into the second quarter 2025. Jonah, how are you feeling about that end of year bonus? You ever work one of them jobs?
Man, I've gotten a couple end of year bonuses in my day. Sure, like Christmas bonuses and things like that, they call them. Normally it feels pretty good. Yeah. I mean, I don't think I've gotten any like huge ones, big ones, 5 figures. I don't think so.
5 figures. Oh, well, I mean, obviously the level of bonus depends on, your appreciation, relative.
Some people give you end of year bonus, $100. Right. What am I going to do with that? Right? I'm just going to eat that this evening.
Okay.
Legitimately, I feel. Anyway, so I think I've gotten a few, but nothing that I can remember to write home about. Nothing that was really big.
Now, when we first got started in the Cash Compound system here, and the Banking Bros were emerging as a force to teach people this whole system, I remember that we decided to give ourselves an end-of-year bonus of $200. I think it was the first time we ever did it. $200. So now you could eat tonight and tomorrow.
That's why I don't remember.
Okay. Yep. Now, I was in a thread with the bros, right?
Okay.
With the guys.
Yep.
And one of the guys was working real estate and mortgages, and he was talking about his end of year bonus, $20K.
Yeah.
When I gave myself or you gave me, I don't know who did it. It was probably your idea.
But you got to be thankful for that 200. Cha-ching.
You do. Now, ladies and gentlemen, why and how that applies to what we teach here in the save and spend system is because dividends are an annual bonus, as we like to say. Mm-hmm. And it's not because that's the technical term. It's because it's the easiest way to think about how you can participate in a mutual company's profits year to year when you have a participating style contract with them. Jonah, break down the technicalities.
A dividend is specifically a return of unused premium, but you do have to have a participating policy, a participating company, mutual company, in order to get one in the first place. So here's how I like to look at it and think of it. In the world, businesses are in business to make money. That's what they have to do. If a business is not making money for too many years consistently in a row, or if they started and did not make money right out of the gate, more than likely that business is not going to be around for very long. Now, if the business does make money, think big, long, established businesses. You can think of your favorite restaurants, maybe the McDonald's or Burger Kings. You can think of the popular ones that are around these days, the Netflixes, the Spotifys, right? These companies make money year over year over year. And then when they make money, that's profit, and they give the profit back to some of the shareholders, stockholders, people that are involved, the upper echelon of the company, right? A lot of times. And so think about your favorite insurance company. Now, your favorite insurance company might be one that's got a lot of commercials. State Farms, Progressives, Allstates. We bring those up. Liberty Mutual, Aflac. From
Liberty.
There you go. So these companies make money too. They got money to spend on commercials and marketing. And every time I turn on the football game or the basketball game, they're sponsored by some of these companies, right? I saw a Meritus life insurance company sitting on the side of a game recently on my TV. I thought that was pretty cool. We like to use Emeritus life insurance.
I have an Emeritus life insurance policy myself.
Yep. It was at Duke. Duke basketball was playing against Florida State.
Was it at Cameron Indoor or was it down there?
Cameron Indoor Stadium in North Carolina. Emeritus right there on the sign. So I thought that was fun, right? But these companies make money, and when companies make money, they're sharing profits with someone. Mutual companies choose to share the profits with the policyholders that make up the company. Stock companies choose to share the profits with the stockholders or shareholders. So one of the reasons that we use mutual companies is because we are buying a product, whole life insurance, from companies that have been around for a really long time, that are established, that make money, and mutual companies have chosen to share the money back with us. And so that's why we choose them. I mean, if you're going to pick a company, one's going to send you a check each year at the end and one isn't, which one are you probably going to choose?
Well, it also, though, breaks down into what type of insurance are you looking for?
Yeah, sure. And I mean, there's a lot of factors, and price, all sorts of things, right?
Where they operate.
Yeah. If I've got to go get new car insurance, and State Farm's going to offer that to me at a $50 a month bill or rate, and USAA is going to offer that to me at $200 a month, I might choose State Farm because of price, even though USAA is a mutually owned insurance company and will send you a check at the end of the year. Now, if you knew what the check was, or if it was guaranteed and the check was $3,000, you might pay the higher price because I know it's coming back to me in the check. There's all sorts of factors, right? But the cool thing about dividends is exactly that. That's why we kind of call it a bonus. It's a benefit from your whole life policies that you get if you use mutual companies at the end of the year.
All right. I love it. Ladies and gentlemen, let's break down some of the terminology here. Now, many times when you're going from podcast to podcast, listening to the Banking Bros, understanding coaches' perspectives from the Cash Compound, and then moving on to somebody else you might enjoy, or someone who sounds slightly different than us, we might actually use slightly different terms for the same thing. So we want you to know that when you hear of participating insurance policies, that is the same thing as dividend paying. Dividend paying, participating mean the same thing. You get to be a partner, you get to be a stakeholder in the deal, and you get to earn those quote unquote shares, even though they're not technically shares. So just so you know, that means the same thing. Often I'm on phone calls with people who are getting coaching conferences with me, right? A cash coaching consultation, and they're using a slightly different term.
Yep.
And they're confused because they hear things like, oh, yeah, well, I got to make sure we get living benefits. Mm-hmm. And I'm like, well, that's actually the exact same thing as being able to utilize cash value.
Yep. And a lot of times they hit us with that.
Say what?
And we're like, it's the same thing. You just used a different term, right?
So dividend paying or participating life insurance contracts are actually the same thing. Mm-hmm. So you don't have to be worried about that terminology. When we say profits, that is a word we use to be common vernacular. I think that's the word, vernacular, just so we understand what's going on. That's actually not the official term. Now, the official term, Jonah, is going to bring up a lot of opinion by people out there like Dave Ramsey, like Susie Orman.
Uh-oh.
I got a bad feeling about this.
You know it's coming, so I want you to break this down for everybody here.
Okay.
A dividend in terms of Dave Ramsey.
Yep.
Coming up to us from the 123 Financial Plaza out there in north of
Texas.
Brentwood, Tennessee.
Oh,
no,
Tennessee.
it's Tennessee, wherever it is.
Okay.
In Nashville, north of Nashville. Is it Brentwood?
I don't know. I saw his house. I just assumed that house had to be in Texas, how big that house was.
Right? Okay. So they are going to make sure everybody knows that this return of premium you just mentioned means that the insurance company overcharged you for your insurance.
That's what they say.
Help us understand what that means and break it down for people as we get closer and closer to the big reveal and surprise we just built for you.
I have heard that before, actually, that they say the only reason they're giving you the dividend back is because they overcharged you in the first place for the product you bought, the insurance. And unfortunately, I just don't think that's the case. And here's what I mean. Companies are in business to make money. Companies who have been in business for more than 1 year in a row, right? Probably 2 years, 3 years, that sort of thing. They have to have profits. Like, what company do you know that's doing business that doesn't have profits?
Well, when it comes to the IRS, we don't want to tell them about profits.
Well,
I'll tell you that much.
I get that. But these are big, established, 100-year-old, 200-year-old companies. Like, they have profits on their books.
Right.
A lot of these companies, you can even Google their kind of annual statement is public knowledge. You can Google what their profits are for the year. So these companies have profits. even your stock companies have profits. And so to say the only reason you're getting a check from the profits is because they overcharged you in the first place would be the same thing to say the only reason that the stockholders or shareholders get a check from the profits is because they overcharged all the customers. It would have to be the same thing. And that's why I don't like the statement, the argument, they overcharged you, that's the only reason you're getting a dividend. I just don't, that's just not how it works.
The reason I like to bring it up is because there are many people out there coloring or flavoring the conversation with their experience. And a lot of people who talk about permanent life insurance, which could include universal life insurance or whole life insurance, want to say that. So I want to make sure everybody out there who's just learning from us, even though we've been here over and over and over, it may be your very first time. We're so glad you're here. Make sure you like and subscribe to our channels at The Banking Bros or The Cash Compound, wherever you like to take in podcast, videos, or your social media. We just want those people to know, hey, these things are okay. Here's what's really going on. So we have tackled the myth, the money myth, which is kind of how we started off this series of podcasts 4, 5, 6 years ago.
Yep.
With the idea of return of premium, what's really going on there, and defining what dividends are all about. You mentioned something new that I want to talk about, and that is a stock insurance company. I quick Googled, GPT'd how many life insurance companies there are in North America.
Okay.
So this is going to be U.S., Canada, and Mexico. In 2021, how many total life insurance companies could the computer find?
12,000.
12,000, 737.
Okay.
737.
I just didn't know anything about Canada and Mexico, and I assumed that maybe there were some small ones or people who primarily focus on car insurance that also do life account.
You got it.
Okay.
Right, 737. So, Jonah, next question. You mentioned stock companies. I want to dive into that.
Yep.
How many companies have the commercials you would generally see, which is not, of course, a telltale
from a
sign,
stock
but
company?
it's stock
And
companies.
give me my total number again, 737.
737. How many of them are stock?
600.
542.
Okay.
And 114 mutual companies,
Okay.
and 71 fraternal societies.
Oh, okay.
Okay, so we've actually worked with a fraternal society company as well, but a mutual company, see, that's a lot less than the stock companies that are out there.
Yep.
Over the course of the last 100 years or so, many companies have demutualized. They've like defriended, right? You ever defriended someone on social?
I have. You can unfollow, you can mute, you can unmute, you can do all sorts of fun stuff these days.
Have you ever defriended?
Unfriend?
Unfriended? Is it unfriend or defriend?
I think it's unfriend.
Have you ever unfriended a client?
A client? No, I don't think
Have
so.
you ever friended a client, first off?
Yeah.
Okay.
I've muted some people.
All right.
Like, this is not for me.
Right.
But no, I don't normally defriend. You got to do something real bad for me to defriend you, because I'll just
Especially
mute
because you can mute it.
Yeah, I'll just mute you.
Right.
Right.
During political season, you got to just mute people.
Mm-hmm.
Right. If something doesn't work out for somebody in the marketplace, in their life, in their family, they start showing pictures of weird things, I'm going to have to mute that.
Mm-hmm.
Okay, so the mutual companies out there, about 114. Now, we are looking for more things than just a mutual company. We'll get into that in a different conversation, a different podcast. But at this time, we want to talk about how those dividends work. At the end of every policy year, okay, this is actually called the renewal time.
Mm-hmm.
At the end of your anniversary for your contract or policy, those words can also be interchanged.
Mm-hmm.
The insurance company is going to let you know if and when they declared at probably their annual meetings, their profits and their financials. They're going to now tell you, this is what you're going to be participating in. Here's your cut.
I definitely look forward to that each and every year.
Yeah.
Because I love getting the email or the letter in the mail that says, here's your cut.
Yeah.
Right? Now, there are a couple of ways that you can use your dividend when it's
Right.
announced to you. I think there's 5 technical ways.
Okay.
I'm going to give you a pop quiz, see if you can tell us what the 5 ways you can use your dividend when you're giving it.
Okay.
5 different ways you can use it. What can you do?
Number 1, they'll send it to you in cash.
That is correct.
Okay.
Cha-ching. Oh, I got some sound effects for you. That was a good one.
Boom.
Perfect.
So they send that check to the house.
Yep.
Okay. That's
one.
one way. Another way, which is going to be cash later,
Okay.
is going to be interest bearing. Put it in account with them.
Yep.
The insurance company says you can buy money later for money now. It's
Yep.
called premium. That's basically what they do. So they're really good at saying, hey, if you want us to keep it, we'll turn it into bigger money later.
Yep.
Interest-bearing accounts.
That is also correct.
Okay.
Good work on that. Yep.
Number 3 would be, this is the one that the average life insurance salesman would mention,
Okay.
and most people out there, including you, would probably know. And it's back when you started your policy, year 1, last year, or 25 years ago, the insurance company guy said, the agent, hey, don't worry about this crazy premium we're about to charge you. The dividend will start to pay for it for you.
That's correct.
So instead of paying the full premium amount in later years, the dividend offsets your premium. Okay. And number 4, the one we most wholeheartedly endorse for the infinite banking concept strategy that we're always talking about around here is going to be your dividend goes on top of the policy contract that you have, buying you larger portions of money in the future and giving you more cash to leverage from the insurance company now.
That is correct. That is 4 of the
Paid up
5.
additions.
There's one more that you can actually do with your dividend. We don't normally talk about it.
Gosh, I'm racking my brain right
It's
now.
relatively easy. We don't normally talk about it.
Hold on, they can send you money.
Yeah.
They can keep the money and grow it.
Yep.
They can offset the premium charge.
Yep.
You can buy more insurance with it, which is what I do.
It's another offset option.
Offsets your loans.
There you go. That's exactly.
Offsets your loans.
That's the 5th thing you can do. If you've taken out loans,
Yep.
you can use your dividend to repay some of those.
Got it.
Yeah, offset some of the loans.
Got it and got it.
So every year when you get your dividend or throughout the year, you can change and adjust these options. It's completely up to you. It's the bonus check. It's the benefit of having this policy. You're going to get this check. But of course, we wholeheartedly recommend using the dividend to purchase more paid up additions. If you are interested in doing the infinite banking concept well, if you've read Becoming Your Own Banker by R. Nelson Nash, if you follow us on our platforms and our socials and our teaching, our courses, our classes, you know that the option that we recommend is using your dividend for paid up additions, because when you use your dividend for paid up additions increases the value of your death benefit. Because your death benefit has increased and cash value is the liquid equity that is usable today of that death benefit, you have officially purchased that money for your family. Either your family gets it after you're gone and the policy expires, the death benefit is paid out, or you will earn and realize that money throughout your lifetime because you will use it as cash value. And that's really important. Paid up addition also generates guaranteed cash value today. So this is 2 things that I just mentioned. Death benefit increased, all of the benefits that come with the death benefit increasing. Cash value also increases immediately today, that you can go out and use this money. So 2 things happen. And you better believe that we are a big fan of 2 things happening. That's why we call our infinite banking presentation the save and spend system. 2 things at once. We talk about this all the time, and you better believe that's the option that we choose for the dividend.
Okay, ladies and gentlemen, here is another topic that you need to understand. When you have a whole life insurance contract, your dollars that you put in, premium deposit, cup 1, the red cup, wherever you're looking for it, those dollars are guaranteed to do several things for you, including pay out a death benefit. Cash value is a guaranteed pool of equity money that can be leveraged. It's the net now for the future, gross pay later. We talk about this all the time. We want to nail it into your head. Here's what we want to help you understand about dividends. They are not guaranteed, but they are extra.
Yep.
They are extra. Many times out there, proponents of other products or investment strategists out there who say whole life insurance is a terrible investment, you can do better elsewhere. Many of you are thinking that right now. You've got to be reminded out there that there are guarantees here, which makes this process and the product of whole life insurance not an investment at all. There is going to be a guaranteed growth, but there's also extra potential profits coming to you as dividends. That is a separate idea.
Yep.
I'd still be in the game, even with the guarantees.
Me too.
Okay, lots of people don't quite get that, and they hear you're getting a dividend-like return, which is fine, but if you don't understand that there are guarantees and the actual dividends in mutual insurance, annual participating profits for you are extra. You may not remember, well, there's guarantees as well. The dollars don't go down or backward. Okay, Jonah, we have a customer, future customer, shout out there. Who we got this week?
Yeah, big shout out to our fan follow of the week, Sean Klein. So this is a YouTube subscriber. He has recently subscribed to our channel. He's probably watching one of the videos you put out this last week or coming out very
I put out
shortly.
some things that, for those of you who are Sunday school people, I had some things talking about stewardship. Remember that word? From Sunday school, talking about some parables that Jesus told in the New Testament.
And so we put out those videos on YouTube, and Sean Klein recently subscribed to YouTube, probably more interested in those videos, watched them, I'm sure, and hopefully hit the bell. So that means he gets the notifications every time we put out a new video. We like to put out at least 2 videos a week. Sometimes more, 3 or 4 videos a week. And what we do is educate the general public, you, people who are listening right now to our podcast, on all things finance. Of course, specifically talking about the infinite banking concept, our save and spend system as well. So big shout out to Sean. We really appreciate you. If you want to, leave us a comment, man, and we'll come back and we'll find it and we'll read through it and make sure you get your answers. But we really do appreciate the subscribe.
The wait is over, ladies and gentlemen. Jonah, it's time to tell everybody what new things outside of videos we have launched and released just this week. We have been doing some changes, some upfitting, some upgrading, some migrating. Tell the people what is available to the folks who have engaged with us on a consumer level, and they are now infinite bankers within our community.
So this is important. This is for our policyholders only, people who have gotten started with the infinite banking concept, but we have just re-released, really, courses and classes specific for you and your ongoing learning and knowledge about the infinite banking concept. Okay, so this one course that is ready for you now is called Dividends. It is available on our website. Not only will you be able to find it there, of course you can reach out to us if you're having trouble locating it, but it'll also be probably in the show notes here. So if you're driving or listening to the show, you can probably click a link below and find that link to our Dividends course. Again, this is for policyholders only. We've got more courses, opportunities, learning coming for everyone as we continue building and curating infinite banking information and knowledge for those who are interested in giving it a shot, giving it a try, and saving and spending money at the exact same time.
If you're not sure, you want to be an infinite banker, you can test out the waters by jumping into our Facebook group. We have one called Infinite Bankers, put an S on the end. Join us there, answer a few questions. We're just trying to make sure the right people are talking through wealth creation, talking about infinite banking, utilizing policies for, heck, the guarantees, the dividends, the use of getting out of debt, the retirement ideas that they have. We're getting into conversations there all the time. We're happy to answer your questions. Remember, cash consultations and the conversations in that group, absolutely free to get inside our coaches' ears as well. Ladies and gents, we hope you've enjoyed this episode of the Banking Bros podcast. Follow for more. We'll talk to you very soon about the guarantees, but those bonus profits as well, dividends.
You are now tuned to the Banking Bros. Said we couldn't make it, drink or settle, this the life we chose. Gave a lot of game, we never got a lot of things. Bow your head and say the prayer, we taught you how to be the bank.
Each year, the insurance company passes on their profits to us in the form of dividends. Now, this is only because we use mutually owned insurance companies. If you're on the fence about infinite banking, if you're wondering if infinite banking is right for you, not only do I think you should give it a shot, but one of the things that might push you over the edge is the dividends that come each and every year from the insurance company. We like to look at them as a bonus that the insurance companies give, but for sure it's a benefit to add to your cash value, to grow your net worth, to grow your cash values that you can use to leverage. And we think you should totally check out our new course on our site called Dividends. You can learn all about it.